Okay, guys, for the one that were in the session, they understood everything I explained in detail. But in this video, I'm going to recap how I trade with the BAZ indicator, and I use it as my main strategy. So here you can see the BAZ indicator. It must be installed here. We had a call earlier where I explained about the dealing range. Range. When I explained about the dealing range and how the phases validate our zone. Okay, we will find a strong, look for a strong high or protected high after manipulation, and from there we will find our entry. So all this was explained in the previous video, but you remember that we are targeting liquidity, okay? And we know what liquidity is, I explained in the other video. So for now, we're going to go straight here. We are going to deactivate the indicator so we can first understand the simple steps that I wrote down here, and we're gonna put them right here and use them to understand what we are seeing on the chart. So these are the 5 steps. First of all, you need to find the bias. We will use the daily time frame for that. It will help you choose a pair. What do I say? It will help you choose a pair. You don't need to force a bias on a pair. You must find a clear bias. When you find the bias, then you can trade a pair. You can use US pairs, okay? You can use EU, like in this example. But if EU doesn't give you nothing, go look for GU. If GU doesn't give you something, you have USD CHF. And if all these 3 doesn't give you nothing, then go maybe check on gold, okay, or some other instrument, but don't force your trade. And if you trade Asia, you can look at EJ, okay, GJ, or UJ. So you know you have a lot of pairs in your basket. You don't need to force a bias. Remember now, I told you first step, you need to find the bias on the daily. What does that mean? I mean, on the daily, you need to know where the next daily candle will go. You have to target and ask yourself, what will that candle do? Let's have 2 candles here that we marked as bearish and another one as bullish. These 2 candles will explain how I target the next candle. So here we have 2 candles. We are trying to trade the third one. We don't know which side this candle will go, okay? So at the market open, because you know how the candle forms, we have an opening and then a high and then a low and then a close. I don't know why my mouse is doing that, but a high, a low, and this is a bearish candle. That's how it forms. So if you have this as an open, then at some point in the day, the price went and created a high, then it comes and creates a low, and then price come and close around here. Okay, I want you all to see this. And how do you know that the candle will be bullish or bearish? First of all, you don't know. You need to look at what the price will tell you. Okay, so if we consider this to be a bearish candle, this is how it is. So if this is a daily, inside of the daily you will have this price action. You can look this chart here, you can look them with a line chart. You see what I'm drawing here, it's lines to explain how the candle forms. And if it's a bullish candle like this one, like this guy here, what do you have? The candle will open somewhere. Okay, it's a bullish one, it doesn't open here. Okay, candle will open somewhere here. Okay, so remember, the direction is defined on how the candle will form, and then create a low, then create a high, then come and close here. This is how a bullish candle will form. So this is a generic information. I'm not saying that all the bullish candle will form like this, but all the bullish candle will have a low, will have a high, an open, and a close. And you will always know that the lowest point, okay, is the low, but the lowest point of the body is the open. From here, let's write open. Sorry, we have open here. This is where the market opened, okay, and this is where it closed. So we have the open and the close. For the bearish candle, it's the opposite. The open is high here and the close is down here. So be careful. The candle formation will help you define the daily bias. Now let's go right into it, and I'm going to show you how to use the candle formation to guess the next daily. So now, first of all, imagine this was a bearish candle. The day started around here. Okay, so no price action. Price comes, open, create a high. Okay, so let's mark this as a high. We are going to mark later. So this is our high, right? Then price come back and turn red, because now it's bearish. So we have an open. Now this is a high. Okay, we have a high here, and from there price come and close here. First scenario, when price break a level and close in breakout, we are expecting the continuation of that move. So we are targeting this. As we trade and we target liquidity, the liquidity we are targeting will be this one. This will be our liquidity target. Okay, when you have this, you know where price will go. You know price will be bearish. So whatever price does inside here, you don't care. You wait for the right moment. You see a strong high or a strong low. In this case, it's a strong high, and then you sell, targeting this guy here. This was the first scenario. Second scenario, what is it? Price could open, create a high, return here, and close somewhere here after creating this low. What do you have at that point? When it's something like this, you are not sure about what is happening. So you need to observe, where are you according to the main range? Are you in discount, premium? Are you in a fair value gap? Is this rejection have a meaning? From there, you will decide that the next candle could be bullish. Why? We did not close in breakout, first of all, and we came back inside, so this rejection is strong. So you know, closing in breakout or not closing in breakout, it's what will define our direction. Now once we close like this, the next candle we target will be to go up. So our liquidity target will be this guy here, and then we wait for a candle to open. As it's a bullish candle, it will create a low. It will be red at some point. Then after creating a low, okay, Now this candle will turn, giving us this as a low, continue, tap here, and continue higher. But this was our target. So here, if it's closed bullish, according to the previous daily candle, what do you have? You have now close in breakout. So this is now like a rejection. And here, what do you say? We continue higher. So you expect to have the next candle to go higher. So you see the two scenarios. First, we swept liquidity. Okay. Then we continue lower and closed below. Bearish intention. For this case, we continue lower because the candle has shown us that we need to target this low. The opposite happened when we swept liquidity and did not close below. Then we swept liquidity here. We came back inside. After closing here, we know now price is going higher. But inside this reversal, at some point, you will find a strong high or a strong low. And in this case, it will be a strong low, okay, on H1 or H4. And after targeting this, after closing bullish, now we will target this guy here. And that is when you can start looking at a point of interest. Maybe you will have another big red candle here with a fair value gap. Okay, you have maybe a fair value gap here that we can target. And this candle, instead of targeting only here, we will observe the price create, it will start red, always start red to create what? The low. Create the low. After creating the low, what price will do? Price will return, continue higher, boom, turn green. Okay, it turns green. Now price is about to go higher. Take out our target and continue on inside of this fair value gap. When we have something like this, what do we expect? We close in breakout, next day is bullish. But if you see next day, now this is another case scenario. If you see next day target hit this level, which is now our liquidity target, okay, and after hitting this level, price turns back inside and close something like this. Okay, the only reason to continue higher is because you have equal lows here, double top. Remember, I showed you here double tops and double bottoms. Now, when you continue like this and you take out these equal highs, liquidity take it out, okay, you can expect now price to return inside. And if price come and close like this, what do you expect? Okay, what do you expect? You want to see the next day be bearish. It can be bullish, yeah, if only we are going in a bullish trend and this was just a retracement. But most of the time price will not lose time here, it will expand directly. Okay, so if you have a break and closing breakout, we expect to continue. If we close inside of the range after sweeping aside, we go in the opposite direction. Okay, and every time we ask ourselves, where are we according to the direction? The daily bias, into the discount or the premium zone, watching our point of interest, which is a fair value gap, okay, and our supply and demand on a higher time frame. When you think about this and you observe the candle formation, you will be right around 8 out of 10 times you'll find the direction right. Now, once you find the direction, okay, what is the next step? Second step is to find a strong high or a strong low that you will easily spot if you observe the edge and session liquidity. Okay, so here let's go now on the charts. This was the daily time frame. What did the daily do here? I need to delete this so our chart is clean. What did price do? Remember, we had bullish, and then we closed bearish. Now, my idea, I want to be bearish. Why? Because price has turned around. We turned around, and until I see a break bullish, I will stay bearish. Okay? I know price did not close out, but remember, like I told you, after an expansion, we have a retracement. So the next day could be bearish. Also, you can observe that price has left fair value gaps, okay, that must be retested. Okay, and if you want to go in depth, you can even observe the key levels like this one, or this one, or this one, and price always come and react on these key zones. Okay, so we stay here in this idea and we say that we are going to sell. So if we are going to sell, we need to find a strong high wide to target inside this range. Let's go now on H4 and see if we have one. Okay, remember, the strong high must be a sweep, then we must have a break of structure, and then here we will observe what price will do on a lower time frame. If we have, let me show you again, if we have a consolidation, a sweep, then we break structure, we need to see, this is the H4, we need to see on the lower time frame something create a high that is broken, and that is when on the lower time frame we know price has turned bullish, so it confirms our range. We know now this sweep and this break of structure could give us something here. Okay, and also this inducement, it's a proof that price will come back inside, and once we come back inside, okay, we observe what price will do. But knowing our premium and discount area, when price will reach a certain level here inside, we need to see another low broken, as we saw this one break here. Okay, and this one here. Now after that, we know we have seen this. We will look at what price will do. Okay, it's not gonna play out all of the time the same thing. You don't need to keep the pattern or memorize it. You need to understand the logic, and from the logic you can take your trades. Okay, this is a supply zone. From this supply zone, you will have price create another supply zone, the lower time frame, and that's why you can enter. Okay, so we need to find a strong high on H4, and I think we did here, because we see how price closed bearish here. And after finding the strong high, what do we need to do? We need to find a valid BAZ block inside our valid range. So now we need to drop on M15. Okay, once we drop on M15, after sweeping this liquidity here, let me mark this as liquidity sweep, all the colors. Okay, after this liquidity sweep, now we have a break of structure. Some will call this market structure shift, but just call it break of structure, easy, and it's okay. And after this, I want to see price come back inside, validate. You see it here, the broke structure. So now price has swept liquidity here, created a small strong low to come back inside here. We need now to observe how price will react inside our supply zone. Okay, when you activate the BAZ indicator, you will have a level here around this zone. Do you see that? Now let's push price and see what price will do here. You see what price did here? Price created liquidity and then swept liquidity, touched our BAZ indicator order block, which is a BAZ block, and then from there, let's observe price. Price touched and dropped for some time. So if you took this trade, you see how price dropped? Good. We need to go now here. I'm going to show you how you enter. So you find a strong high or strong low on a higher time frame. We've marked the supply zone. Find your valid BAZ block inside our valid range. Our valid range is this one here. The BAZ block is here. You see how we touched it here. Wait for a sweep of liquidity. What is this? This is liquidity here. After this sweep, price came and touched. Okay, wait for our zone to get tapped, our POY, which is in confluence with our BAZ indicator. At this moment, you enter on the engulfing candle on your entry time frame. Our entry time frame is M15. I use M15 with H4 strong high or strong low, and I use M5 for 1 hour strong high and strong lows. So here, it's simple. After I see this, I need to see an engulfing candle. After we tapped here, anything engulfed? No, swept. Here also it swept liquidity again and rejected. And once we had this, we could think of selling, but the one that I see that is clear, it's around here, engulfed. Once we close here, I hope you all know what an engulfing candle is. After we closed here, okay, price melted down. We protect above our BAZ block. We target 3R, and it will match with another liquidity zone, and that's where we take our profit. So the trade happened inside our zone, touching the BAZ indicator and going lower. So the BAZ indicator help us do what? First, validate our strong high. Once we have a BAZ indicator inside our strong high, it's valid. The strong high is validated automatically because we have this BAZ block inside. We also have to see how the liquidity created inside of our range. Once we swept it, everything we are doing for sales, okay, will always give us inducement for buys. So the buy side liquidity will get run, and that is the last liquidity that we need to see swept before we can sell from this zone. Okay, and once we touched here and saw an engulfing candle, an engulfment of this bullish moment, we could sell. Okay, some people will also use the fair value gap. It all depends on how easy it feels for you, because some other people prefer to enter from another block like this, from a retest. So once you have a zone like this, okay, you can enter there. Why? Because the one that entered from the engulfment was an execution, a direct execution, market execution. But if you came late, okay, and price was already, let me show you. If price was already here, engulfing occurred already, price was going, what would you do here? You will mark this imbalance, fair value gap, and then you can enter there. Maybe you will have less, but this is the safest way to enter. Now, if price comes and tap our fair value gap and then engulf again, if you come late again from this fair value gap, you see an engulfment like this, you can enter from this engulfment also, and then you will target your sell side liquidity. You see that? So you have the 5 steps here. From the first video, I explained to you what is liquidity, how to find our valid zone, manipulate, our price manipulate, and how we are going to take from this. And that's exactly what we saw here. You see? And price melted. Yeah. So from now on, I will start posting all my live session on YouTube for you, so you can come and see what we did, and from there we will evolve together. Remember, I told you when I was on the daily time frame, this green line was the fair value gap, right? And now you can see how price dropped from this fair value gap and went straight to liquidity. Remember, this is liquidity down here. Okay, so thank you again for your patience. I had to remake this video because the call that we had was very long, so I had to synthesize everything and give you something that you can come and rewatch and execute upon. So thank you again, everyone. If you have any question, just write to me directly from the Psycho app or the BAZ community, and I will give you answers about anything. So this trade could have went straight to hell and give us a 10-hour trade. Okay, so this is how you catch this kind of moves. It's possible. On the M15 you can get it. You need a daily bias first, and then find a strong high or a strong low. Observe how the Asian session play out, and then you can enter either after the Asia session or from the Asia session, depends on the day. This was a Monday, so you need to understand that the candle formation will also impact how you see the market. Maybe it can be Monday first going up, and then Tuesday, Wednesday, Friday come and close. This is a bearish candle, okay? But this can also be a daily candle, can also be an H4 candle. This strategy will work with every time frame, depends on what time frame alignments you choose for your trading style. Okay, if you are a day trader, you will probably use a daily and H4 and M15. Okay, if you are intraday, like you don't want your trade to go to the next day, you will use daily and H1 and M5. Okay, and if you scalp, you can use H4 for your candle analysis, like to find the bias here, the number one step, and then from there you can drop on M15 and you will take your entry on M1. But I don't recommend this for beginners because the last one is tricky, and sometimes you can get stopped out with the manipulation, the intra-session manipulation, and all the candles that form inside the day that could not help you be profitable. So stick with one. If you choose the H4, the H1, stick with one, and always watch the BAZ indicators to give you the targets, the liquidity that has been swept, and also to validate your strong high or your strong low. So thank you again. I think this video is over now. We will see on we will see each other on on Sunday for the market analysis. Today was Wednesday. Tomorrow I will send signals, and yeah, we can all profit from this. Thank you everyone, and sorry for my English. It's a little bit tricky and rusty for me to speak English, but yeah, that's it. My name is Emil, and this was Blue Leopard Trading, my own strategy that I use with the BAZ indicator. I'm an educator and instructor in the BAZ community, and yeah, I think everyone who watched this video knows me. So let's meet later. Bye bye.